Hi everybody, this is Bo Sanchez here in the Truly Rich Club, and I know a lot of people are asking now about the stock market, and so we will be doing this regularly. Every single month we will pick the brains of my mentor, our mentor, Chairman Edward Lee. He's someone who's been in the stock market for 30 plus years, and with that incredible experience, he will give you that wisdom. You know, we've been receiving messages from the Truly Rich Club members, and they've been asking the question, am I doing something wrong? Why is my portfolio all negative? Why is it all red? And so we're going to get the answer from the man himself, Edward Lee. Edward, thank you so much.
Yes, Brother Bo.
Thank you, thank you. We're going to ask that question. Can you give us your wisdom?
Well, the problem with most people is that when they're investing in the stock market, they don't differentiate between the being long term or short term. No?
Yes.
I think when you have a short term pullback like this, it really scares people because you see your portfolio going down. No?
People are really scared.
Okay.
They panic.
That's right. I think so is everybody else. No? But if you are investing for the long term, you should always be looking at it as a great opportunity to be able to accumulate all these good companies at a bargain price. No? Like I was explaining to you the last time, is that you then start doubting about the long-term investment strategy. But you should be, the discipline has to be there. You need to continue to deploy on all these companies, especially during these difficult times. No?
I think what happens, Edward, is sometimes they question, am I doing something wrong, or is the system wrong?
That's right. It's all about validations. No? We were talking about it a while ago. A lot of times is that they know that stocks outperform all asset class. It has been validated so many times. The 1920s till today, the stock market is still in a new high, even going through a lot of depressions, a lot of oil crises, a lot of deleveraging. Today, the U.S. stock market is still on a new high. The Philippines, with so much coup d'etat during martial laws, tragedies. Today, the market is still 6,200, 300. It's still way, way high as compared to what it is before. So you know that the answer is really correct, that stocks outperform all asset class, and stock is the best way to go. Because if you're looking for emerging markets, you're talking about 40, 15% growth every year. So it's much, much better than your regular 1.5%, 2% interest rates.
Yes. Yeah. So it is better than all other assets, like you've got real estate.
That's right.
You've got, of course, the banks, the fixed
income
as
compared to inflation.
Yes.
Yeah, so they have to stick to that's why it's called a program. The program is an investment program that you continue to deploy, and the best is buying all these good companies that pays dividends, and reinvest the dividends to the stocks. And over time, this is a period, we think that because of the carry trade in the U.S., the 10-year treasury has gone from...
You need to share about that, discuss about that, because somebody was asking me a very good question. She said, TRC member, she said, you know, the stocks went down even before Yolanda. And that's people are saying Yolanda is the one that made the stock market go down. So please explain, why did it go down even before Yolanda?
Well, what really happened in April, there was before the talk of this tapering, what happened is that the U.S. 10-year Treasury started moving up from 1.6% to about 1.8%. Till today, it's about 2.7%, 2.8%. The 10-year Treasury. This is a long-term Treasury bill as compared to the short. No? The short has not moved. So what happened is that the Philippines 10-year is about 3.3%, 3.5% today.
Okay.
And comparing with the U.S., which is 2.7%, 2.8%, there's really no more meat for people. So what happened is that the money flows out from the emerging market going back to the developed market because of the long-term interest rates that has moved from 1.6 to almost 3% today.
So what you're saying, Edward, just to simplify for people who don't have this background, that includes me, is that foreign funds that were invested in the stock market, because of that change of the increase of the Treasury interest rates?
10-year Treasury
10-year in the U.S., they started pulling out their money from our stock market out. So that's why we've got this depressed stock market.
Yes, that's right. Yolanda is just an excuse.
All right. I wanted you to say that.
Yes, Yolanda is just an excuse because
for them,
for us here in the Philippines.
Okay.
Now but for the U.S. fund managers, they've been selling.
Yeah.
Even prior to Yolanda, they've been continuing being selling already. Now, please, the members, TRC members, has to understand that the drop is not only in the Philippines; it includes Indonesia, it includes Thailand.
Okay.
So
it cannot be Yolanda.
It's not the Yolanda. Yolanda is just for the Filipinos to basically get scared. That's all it is. It's just an excuse. It's just an excuse.
So that's bad news in a sense that foreign funds have left the Philippine stock market.
Yes, right.
But it's good news for you, for me, because we're long-term investors.
That's
and
right.
what Edward is saying, take opportunity every single month. We follow a program. It's called Strategic Averaging Method, SAM. And every month you're supposed to buy. So when your whole portfolio is red, it's good. Because we're long term.
What we should all, I think what is really key here is that the emotional cycle investing is always in play. No? So whenever prices are going down, people start doubting maybe the stock, they're doing something wrong.
Yeah.
But what they don't understand, this is part of this investment program for the long term. And if you're short term, you will always go to this volatility. That's one of the reasons why we always make the comment of Peter Lynch is that short term there is really no correlation, meaning success of the company's performance and the success of the performance of the stock is not correlated. But long term, it's 100% correlation based on earnings. As this company continue to generate more earnings going forward, then it's just temporary pullback, setback, but
fantastic.
For us, it is the best time to continue to deploy. Now, I think what we need to tell them is that the maximum really just have to be 20% of their savings.
That's right.
That goes to the stock market investing. Because if they do more than that, then they will really get scared. They'll have a stomaching, they'll probably sell at the bottom.
Edward, one last question, and maybe this is a question for all our viewers that have it in their minds. Okay, Edward, we'll really try to deploy now, buy now, close our eyes and just buy no matter how red it is and how. Edward, question, how long will we see it finally going up? Is it a few months? Is it?
Well, the sad part about all this is that we have an earnings peak. We call it an earnings peak. We have the highest earnings for the Philippine Composite Index in 2013. 2013. Yes. And the problem is that by 2014, you will have a single earnings growth, meaning the estimate is about 6.5% to 7% in terms of earnings, EPS growth for the Philippine Composite Index. So because of that, we believe that the market will just continue to just stay sideways. Sideways for about a year. Yes.
Okay.
About 9 months to a year.
All right.
Yeah.
And so that's good news.
That's supposed to be good for us because when you have a sideways environment, then that means whatever we're deploying today, we have a lot of time to be able to deploy for. Because we believe that by 2015, because this year is a high base, so next year will be a much lower base. So going 2015, we'll go back to the double-digit earnings growth.
Wow.
So 2015 should be the best year. But you need to accumulate within this 9 months to a year.
So that's it. From our great mentor, Edward Lee, we're foreseeing it's going to be a sideways movement for, December, and for one whole year, which is fantastic for all of us because that means you have to keep on buying every single month. And then I want you to go to your friends, your families, and say, now is the time to start investing because by 2015, the stock market will start going up. That's our projection. That's the projection of Edward. And so they've got to accumulate now, and then we'll all be smiling after all these sideways movement for 1 year. That's right. Thank you, Edward.
All right.
Thank you so much.
All right.
So we'll see you. Edward will see you next month for his word. Okay. God bless you.